Now we can start recording.
Okay. Good evening, members. Welcome to a very interesting session and the new edition on the topic of Code of Ethics revised and NOCLAR implications. We have invited a specialist on this topic, say Ganesh Balakrishnan from Hyderabad, to address members on this topic, and I'm sure it would be a very interesting session since I've already heard Ganesh on some other platform on the NOCLAR issue. Now, before I request Ganesh to address the members, it's a proud privilege to introduce him. He's a good friend of mine and a colleague at Hyderabad. So Ganesh is an office managing partner of Deloitte Haskins & Sells Hyderabad office, and is in audit and assurance practice with 3 decades of experience. Ganesh heads the talent, learning and development of South Asia cluster of Deloitte audit function. Ganesh is a partner of IFRS faculty with the Institute for all their in-house and open house programs, and serves as a faculty of Dun & Bradstreet for their programs on IFRS and US GAAP. He is associated with the Quality Review Board and Peer Review Board set up by the Institute, the Indian accounting regulator on technical review of accounting firms. He is on the regular faculty of the Board of Studies of ICAI in imparting web-based lectures for students. He is presently associated with Dr. B.R. Ambedkar College and Bhavan's Vivekananda College for review of syllabus in accounting and commerce. He undertakes IFRS training for the Usman University faculties. He is an external member to the School Board of Management Studies of University of Hyderabad. He has presented papers in various forums in India and internationally at universities and other professional bodies on impact of technology on future of accounting, US GAAP, IFRS. Ganesh is also a motivational speaker and speaks regularly at UGC, HRDC OU, Women's College, and other colleges and universities in India. He graduated from Usman University and is a fellow member of the Institute of Chartered Accountants of India and also a cost accountant. He is also a certified public accountant from the American Institute of CPAs. With this very brief profile, I introduce CA Ganesh Balakrishnan and invite him to address the members on the topic of Code of Ethics and NOCLAR implications. Welcome, Ganesh.
Hey, thank you so much. Whilst I don't like any introduction, but thank you so much. Really appreciate it. And I think, time is the essence. So I think what we would do is we will start the presentation because while I do understand it's a Saturday, and for many of the people who have come in, they may probably join in at some point in time. But let's look at. I'm going to split this into 2 aspects of it. When we're going to talk, I'm going to focus more on the NOCLAR implications because that is very, very important for all of us to understand as to what it means. As you're aware that the Institute of Chartered Accountants, the ICAI body itself had deferred it until 30th of September 2022. So therefore, we are looking at this application of this section 260 and 360 of this new Code of Ethics to be applicable from 1st of October. Similarly, there are changes that are being discussed by the NEFRA as well as the Ministry of Corporate Affairs. There are what are called as concept papers, which are in circulation, trying to see and get understanding as to what should be done in respect of these matters. As you would have been aware and also known that given there are significant changes that has come through from the government thinking itself, that the auditors have to do more. And why I'm saying is the auditors have to do more because they believe that the auditors remains with the company for a larger point in time. So therefore, every information from the company is available with the auditors. And that is the reason the focus has been on the chartered accountants over the past couple of years. And it's not going to change anymore. It's only going to go up because the government is thinking that we need to do more. And we have heard very recently the newspaper whether it is in relation to a joint audit, whether it is in relation to, even if you have to resign, there is something which has been brought in by many of the, people can't just resign and go. Now, there are going to be more, in respect of resignations, there are going to be many things that will come up, including on internal controls and the deficiencies. In the recent discussion with the NEFRA, and the line of thinking of NEFRA has been that, they are going to challenge every aspect of it relating to the auditing standard, be it its materiality, be it sampling, be it of assessment of risk of material misstatements, be the section 250 on auditors' considerations to laws and regulations. And if you are aware that auditing standards are mandatory on the auditor, because whenever you carry out an audit of any company, especially the statutory audit, auditors' considerations of laws and regulations is one of the aspects that are covered under the SA 250. Now, that really brings about significant information which was there in the auditing standards, but never looked before as closely as once this NOCLAR issue came up. Now, this NOCLAR issue is actually stares at us. If you were to look at from a perspective, non-compliance of laws and regulations, when somebody talks about it, non-compliance to laws and regulations, so which are the regulations that one should look at it? Because in India, there are more than 4,000 regulations which are there. But one of the focus part which each of the regulators as well as the government is looking at is there anything that results into a fraud? And that I'll talk about once we specifically speak about the NOCLAR implications. It is not only for those people who are in practice. This is applicable for those people who are in service, and that is where it is going to be very challenging, because raising a red flag is not as much as the auditor's responsibility, it is also the responsibility of the professional accountants in service, and I'll touch upon some of this. But I thought I'll give you an overview before, because many of the participants are joining in, so I thought, let me give you an overview. In today's context, when we're going to talk about ethics, professional ethics, we would have learned in our schools and all of that called moral science. We have been taught about morals, but we have the only point is, how do you measure morals? So the only way you can govern a moral is only through a behavior, through the actions that the person would deal with. What is an action that is expected of an auditor? What is an action that is expected of a professional? Is what is in the context of not from the auditor's perspective. It is from a stakeholder's perspective. Who is the stakeholder? The stakeholder need not be the government. Stakeholder need not be the person who is from a banker or a shareholder or a creditor or an employee perspective. It could be to the person who has put in his hard-earned money in any of the companies, or is invested, whether it is in terms of shares or debt or a fixed deposit. I think this is where the whole issue is being driven on ethics. The ethics is no longer today is, do you protect your client by saying that you can do it planning like this, or you can defer your making a provision for doubtful debts, or you can say, hey, listen, yes, dispatch goods after a certain point after the year end, but you record that as a revenue. This is where our whole concept of how do we respond to those situations, more and more with the technology coming into play, more and more the changes would be looked at. Let me share with you a simple example that came through. In fact, I discussed this as a part of my deliberations during the FRRB, the training sessions. Today, FRRB has gone, and especially the institute has gone into digital mode. When I say digital mode, I'm talking about more and more information are getting gathered through digitization. And an FRRB review earlier used to be done, let's say, through what is called a study, identify some people who would be as joining as a part of the FRRB group, and then you submit it. Today, everything is online, including the artificial intelligence, which the analysis can be done or extracted, everything is available online. All the FRRB reviewer has to do is use the application, look at the documents, look at from their understanding. Every tool, every technical standards, every supporting information that is required for an FRRB is available in that site. So when that is the advancement where the ICAI is doing it, our own institute is doing it. With the advent of technology, which whether it's your GST information, whether it's your IT returns or anything you take today, everything is being done through technology. And in fact, your AI's information statement, which is absolutely provides you the entire information as to how you have to conduct it. Having said this, we have to set the standards and raise the bar in as far as the ethics are concerned, and especially the professional ethics are concerned. Now, it will be focused, the regulators will be focusing, the government will be focusing, the market players will be focusing as to what did the auditors do. And this is exactly what is going to determine the behavior of a professional. When you're dealing with, whether it is a client on doing an audit, whether you're representing anything relating to a tax matter, whether you're certifying something for a financial information or a forecasting for raising of funds. And this is again, not only drawn from India, most of these have been drawn outside of India, similar to what we had accounting standards. Now the ethical standard boards of the international ethical standard boards of accountancies, whatever changes have been brought in has been included as a part of our revised code of ethics. Be as it may be, the important part of it for all of us to understand and appreciate it is we need to now start looking at it and addressing it. No longer we can say, okay, listen, fair enough, I'm fine with it. Let's come when it comes to somebody raising an issue. We will continue to do it. The answer is going to be no. More and more such instances are coming up. Let me give you a simple example. There is two shareholders who have been fighting. And one of the shareholders sent out a notice to the company, marking as an audit and also an audit firm. The auditor, all they did not say that he went into the share capital and just put an asterisk and said, there's a legal notice has been received. The matter has gone to a certain extent, it's gone to the ICAI, it has gone also after the ICAI, something has also been raised in the court, saying that the auditor has not discharged his responsibility when a notices have been served to the auditor to include that as part of the disclosures. To that extent is what is being expected from an auditor or an auditor firm. And I think this is what we need to start re-looking at it, is how do we deal with it? More and more litigations are going to be there. Now, why code of ethics? When the code of ethics, what it is, it's been there in the system, right? And why are we talking for the professionals? I think somewhere we need to draw a line of our independence. More and more firms will have to roll out, if you're doing a statutory audit, you need to break it down between statutory audit and other services. Because what really happens as a part of the conflicts is that if you're rendering a statutory audit services, you cannot render any other services other than the attest and assurance functions. So in other words, you cannot be providing a taxation services while certain of the rules are not yet made mandatory, but let me tell you that next 1 or 2, before March 24, 23 or December 24, December 23, this will be enacted. Whilst we can't keep on delaying it, deferring it over a period of time, time is not far behind where the Ministry of Corporate has already started looking at it, whether it's a joint audit, whether it's a taxation, rendering of a taxation services, or having a concentration of fees with a particular client for a more period in time. These are some things which will come on to us, and I think it's better to be prepared, better to mitigate this risk of it, discuss across amongst the partners in the firm, and come up with the strategies or policies where one does not run into issue of non-compliance or conflict of interest. And that's where I'll talk about under section 260 and 360 of the Act. Code of ethics, similar to what you're, whether it's a doctor, whether it's a lawyer, or any other this thing, there is an ethic because we are governed by the parliament, by the Act of Parliament. and we are governed by the principles what is expected of as a professional behavior. A code is basically nothing but which is devised by the ICAI through its ethical principles, professional ethical principles and standards. Now, the only difference is that so far it has been binding on professional persons in practice. Now it's just getting extended to those professionals in service also. Institute actually over the last couple of years have been in the forerunner in terms of looking at each of the changes and have been coming up for many of the changes, whether it's in accounting standards, whether it's in auditing standards, whether it is like providing guidances during the COVID period, whether it is guiding people on any of the matters relating to the professional, the ICAI has been issuing it. In fact, the very good thing with the ICAI did is audit frequently asked question called Audit Fact, where I'm also a member of it. In fact, this is really a great initiative by the ICAI to help the professionals who do not have the adequate support or the literature to run into that. So I think ICAI has been doing its job in terms of providing whatever is required for the members to follow or get protected. Again, this will keep on changing because as much as changes keeps coming up because of certain aspects, whether in India or outside of India. If you look at it, the first time the ICAI came up was in the 1963. It had commentaries relating the first schedule and second schedules to a CA Act of 1949. So far, it has been revised 12 times, but the last release was sometime in July 1st, 2020. Now, between 2009 and 2019, after a gap of 10 years, it's the time when we started adopting the International Ethical Standards Codes of Accounting Standards and Principles. If you look at the ISBA Code of Ethics of 2005, the first time in the year 2009, that's 11th edition, we talked about the 12th edition, which is 2019, had Part A and Part B, and most of these were what are called as taken from whatever has been applicable to under the ISBA rules. There is no changes because today what is happening when we are talking about a global village, once one accounting standard, one accounting language, the auditing cannot be different. The codes cannot be different. And therefore that's the reason the first step which came up was to align ourselves with the code of ethics issued by the International Ethics Standard Codes of Accountancy. But if you look at it between the international and India, there are two aspects of it you need to understand. One, which is applicable for the people in practice or profession, which is normally do it. But we also have domestic laws. We also have other regulations which has to be complied with. That's a CA Act or CA regulations, all of this. All of these are dealt separately. So therefore, the first and the foremost which we're going to talk about is what is aligned with the international standard. Code of Ethics of 2019. Now, if you look at the ISBA also went into revision in the year of 2018, and that's where the 2019 got released. So we are almost bridged the gap between 2005 to 4 years to within 1 year. But we need to also keep remembering that there are so many things that keeps coming up in terms of changes, whether it's a SEBI changes, whether it's an RBI change, whether it's an IRDA change, whether it's a Companies Act change, whether it could be an MCA guidelines, which could be anything. I think those things also need to look at primarily in terms of how we as professionals are rendering services, or how we as professionals are looking at our code of ethics or independence, or how are we managing the self-interest threats or the advocacy threat and all of that. Now, this is a critical aspect of it. Someone might say, listen, in the earlier periods used to have what the bank audits used to be the first and the foremost for any chartered accountant. That means if I have to start a practice, if I get a bank audit, I have sufficient resources. I will have sufficient money that I can come in. But if you see gradually, even the bank audits are now getting dried up because of technology coming into play, and more coming years, you will find that also would undergo change. So is the case with the tax audits that are undergone. Now, in that case, what you need to do is, with the advancement of technology, you need to primarily look at is statutory audit a service? is what is the extent of how much you're deriving or value or getting a money from a statutory audit versus a non-tax audit, non-audit services, and then relate to if there are anything that you get benefited by not doing a statutory audit. Whilst I'm trying to look at it much more holistically, I think we need to start looking at it, because whenever you carry out a statutory audit, there are more restrictions than what you could do it in a other than a statutory audit. Especially the definition of public interest entities, the taxation that we provide to our clients, assessment to the threat of independence, and non-compliance to laws and regulations. I think we need to start re-looking at some of this, because if we put it in place ahead of time, I think we will probably do much better when we do it for compliances. This code of ethics was applicable from 1st of July 2020, barring certain aspects of it, especially relating to compliance, non-compliance of laws and regulations, fees, relative size, and taxation service, which got deferred until September 2022. Now, the government is looking at it. I'm sure the ICAI is going to come up and say, listen, we have already implemented the issue relating to non-compliance of laws and regulations. Fees, relative size, and taxation may still be debated, but the Ministry of Corporate Affairs has already drafted that paper, and that concept paper is already running, and I think most likely that may be converted into a bill. After the bill, it may be put into Parliament for approval. The question then is that when we know that this is going to come up, I think what is important for each one of us to re-look at each of this, the arrangements with the clients in terms of statutory, in terms of fees, in terms of the term of engagement with them. I think these are some of the things which we should start looking at it from now onwards. What are the main changes that have come up in 2019? First and the foremost is on responding to the non-compliance, which we'll talk separately. Second is, right now it's been deferred, but if you look at it, if any of the fees from a single client exceeds 15% of the total fee for a period of 2 years. And this most likely would be for those small firms which are in the initial starting or up to 5 years, or some firms which may have, let's say, a fewer audits, or they may have certain groups which could have a fee. So for instance, suppose if we had a 10 lakh as a fee, I'm just giving an hypothetical example. And if 10 lakhs, if you have one client which contributes about 2 lakhs, let's say the fees from that client is about 2 lakhs for a period of 2 years, this is where you need to have all the safeguards that is to be done. But again, if the firm fee per annum is less than 5 lakhs, this is not applicable. And if PSU fees are not included as part of it. But nevertheless, these are some things which has to be thought through in terms of whether there are concentration of clients in terms of the fee, because this might lead into what is called intimidation threat from a perspective, from a client perspective, and you may have to deal with them differently. Restriction on providing taxation and management services to audit clients. While the government thinking is to implement for larger firms, and they're planning to come up with a threshold, more important is that while it might be implemented similar to what you had like your Indes, for a period of 1 year, 2 years, and 3 years, it might follow a similar line at but some point in time where this will be applicable to all the practicing professionals. The other important aspect of which is very important is between the audit and review engagements, the independence requirements, and between the audit and review and the assurance engagement, the independence requirement is engagements is differentiated. There are specific sections which deals with assurance engagements, which are more or less in line with the audit and review, but nevertheless, where you are not doing an audit, but if you're doing an assurance service could be something like you have done a review of, or you've done a management audit, let's say, right? Or a management, it's only for the purpose of management. You're not going to use for anything else. Even that is getting covered as a part of the other assurance engagements. You could have done, let's say, another assurance engagement could be an IPO. You could be involved in giving certain certifications. You may not be the statutory auditor, but you're carrying out certain assurance functions. You may be giving certain certificates, whether to a bank or to a financial institution, or you may be certifying it from a valuation perspective. You may be certifying it from a merchant banker perspective. So there are various aspects of it which is not covered as part of the audit, is also getting covered as part of the assurance. So now this code of ethics now distinguishes between audit and review and assurance engagement, and this is where it is very important. The other important aspect of that has been brought in is a concept of unintentional breach of independence. An unintentional breach of independence means, it means that, let's say you've been the internal auditor of the firm. Suddenly in the month of April or May or June, the client comes back and says, I want you to be the statutory auditor because my statutory auditor has resigned. You would have said, anyway, I will go and sign it. I can go and get appointed as the statutory auditor. But the breach of independence is, even though your appointment is coming at the AGM, because the period which is between April and the period of up to the AGM is where if you had carried out an internal audit, that could result in the potential breach of independence standards. And that's where you need to start looking at. The institute is coming up with significant changes in terms of firms, network firms, individuals within firms. This concept paper is under discussions. It will most likely supposed to be expected in the month of December or before March. But again, this is a very critical aspect of it. The big firm is what the government is looking at it, and also the institute is looking at it. And this is where the big, because if let's say in a situation of when the government might come up and say, hey, listen, why not we have a joint audit? When we have a joint audit, you may have a situation wherein that, they might be looking at the capability and competence. At that point in time, suppose your network of firms is larger, probably that this is something which will be very, very helpful. So every professional or every chartered accountant in practice should start thinking differently. It is no longer that, having your own proprietor or small partnership is going to help. I think we should start thinking big. We need to have Indian big firms before to have, in fact, to add value, because we do have some of the Indian big firms, but not to the scale and the size where it could come up. I think this is the right time when you should start looking at it when the joint audit is expected to come. If it was to come, I suppose it should be from the next year, 2024, not because this year is almost done. Use of word professional accountant. Now, chartered accountant is no longer being used. Chartered accountant practice no longer is used. It is now the new definition of the code of ethics is called the professional accountant. Again, the professional accountant is defined one who is actually a registered member of the institute, is not debarred, is mentally sound, is not been convicted in any court of law, all of that. That's the definition of a professional accountant. But this professional accountant is also included as a part of professional accountant in service. And I think that is where it is more and more responsibility. One of the questions that can come up and say, hey, listen, whilst I maybe not be interested to be a member, or I would have passed my chartered accountancy course because I don't want to practice. So therefore, I do not become a member of the Institute of Chartered Accountants. And this is where even the ICAI is looking at those people who have not registered themselves as the member of the institute, because this is applicable only to those people who are registered as members of the institute. And I think this is something where the institute has to do more, I would believe, that to bring in, because if you are taking the advantage of saying that I'm a chartered accountant from the Institute of Chartered Accountants of India, I think it's also important for us to appreciate that you can use this only when you can say that you are a member of that institute. And I think that is where more and more the ICAI can play a major role. It is not from any other perspective. It is only to make sure that accountability cannot be imposed by the ICAI on those members who are not members of the institute by not paying the fees for a X period of years. It is only applicable those people who are actually members in practice. And I think this is where we need to start relooking at it. What's the difference between the 2009 code and the 2019 code? I did talk about NOCLAR. That is where the new provision is coming up. I did mention about taxation service. Prohibition of management responsibilities to the audit clients. Now, this is a very important aspect of it. Now, so far, if you look at whether it's a large company or a listed company, there is a management which prepares accounts and it's audited. But if you move to tier 2 and tier 3, what really happens is every information, understanding whether of a balance sheet or a revised schedule 3 or a cargo or understanding of the law, that the management says, we don't understand, you do this. So this is where we need to be very, very careful that the firm shall not assume the management responsibility. Somebody might ask, sir, see, if I were to go and take from we don't take assistants, if I don't provide them assistance, then they will not be able to prepare their accounts and I will not be able to send because the fees that is paid is different. But the question then here is that if you are playing the role of a preparer and doing the certifying it, where is the question of independence and how do you use professional judgments and how do you use auditing principles and standards? I think that becomes very, very clear. The restriction on audit fee earlier was 40% fees, now it's reduced to 15%, but the firm shall disclose. So therefore, those charged with governance can be management, can be board, can be those which is the main people from the board level who are overseeing it. So this is, or it could be a senior management also who could be looking at it with those who are non-executive, who would have the powers of those charged with governance. Now, one of the aspects which was not covered about the unintentional breach is now covered under the part 4A and 4B. I will talk about, there are parts which deals for all called the part A. Part B, again, which is applicable to service, which is applicable to in practice. 4A, 4B will touch upon which applies to both and which, whether it is in professionals, accountants, practice or service, we'll touch upon all of that. Independence requirement, independence standards have brought in all of this. Changes in advertisement guidelines, there was no specific thing. I think now the time has come for the institute to start re-looking at, because see, somebody might say, hey, listen, don't put it in a what is called a post box, right? In a classified, or don't put it somewhere in with this one. I think time has come when the social media has undergone significant change. How are you going to prevent an advertisement? I would agree, we are not in a profession of business. But at the same time, if you see some of the movies, right, there's a movie credit which gives it. Right, it says chartered accountants. So the moment it flashes in its theater, how is that it is not at a disadvantage for those people who have been? I think we need to start re-looking at some of these advertisements. I think, my always take on this part of it is, if you're going and inaugurating a branch, if you're going and inaugurating, let's say, in any of the seminars, you publish your name with the name and everything, saying that I came and I gave my point. Is that not tantamount to an advertisement? I think this is something where we need to start re-looking at it and say, hey, listen, you do advertisement, but do not do advertisement which is in the nature of a business. And I think this is aspect of it has to be looked at, given the changes of social media, which plays significant influence. I might say, the way I can publish, once the CA results gets this one, or let's say if I need articles, I might say there's a leading firm which is this thing which has got so many branches and requires vacancy in profession. How is that not an advertisement? I think somewhere we need to start re-looking at this aspect of it and asking the institute to look at more comprehensively and allow people to look at it and give it, because end of the day, advertisement doesn't mean anything other than the capability of that professional. Because no client walks in to a professional if he's not capable of delivering it. So I think we need to bring that distinction between an advertisement as to what is advertisement for services. I agree that you cannot have an advertisement which says, I will do it for 100 rupees or 200 rupees. And I think that's something, it's a shame for the people who are doing it. And that's where the disciplinary mechanisms are around. But I think generally, this is a very thing which I've been talking to many of the past presidents also. I said, please relook at this. Please look at it if the chartered accountants can do it different. Now, one of the changes that have been brought in is the key definition of or key audit partner. Earlier, if you look at the SQC, the Standards on Quality Control, now with this is also moved to International Standards on Quality Management, which is the revision which is there, the ISQM. If you look at in India, the audit quality milestones, the AQMM, which is being now introduced, and I think that is something which will have scoring cards or ratings for each of the firms. I think this is where the definition of a key audit partner is very important. Now, you will have heard the definition of engagement partner. You would have heard the definition of engagement quality control review. You would have heard the definition of other audit partners, right? But somewhere you won't have heard the definition of key audit partner or other partners. Where does it happen? Now, the role of this key audit partner is, he would say, I will not be a part of the audit, right? I will not be a part of the audit, but every discussion that comes through it will be discussed through me. So therefore, you have got a managing partner of the firm, and the firm is running through him, and he has got all chartered accountants as partners. But this managing partner says, I will not sign. But every matter, he attends every meeting, he attends involved in every discussions of the client relating to accounting matters or auditing matters. He was never covered under the definition before under Code of Ethics. And this is a very important aspect. Many times what happens is, you may define somebody as engagement partner. You may define somebody as engagement quality control review partner. You may define somebody as a technical or a consultation partner. You may define somebody as a risk partner. Something like this you keep on defining, but what you have not defined, that person who's involved in every engagement without his name not being appearing in the financial statements or any of the discussion. I think this is a very important aspect of it, of understanding the key audit partner. The key audit partner is critical mainly because if he's a person who's involved in deciding what decision to be there, which clients to be there and how to be, then that person is also supposed to be binding under the Code of Ethics. And I think that's a very important aspect. So whilst I do understand from a SQC perspective, he may come up as a leadership or a leader, but if he's involved in the clients, if he attends meetings, if he's involved in everything, he should be included as a key audit partner. I think it's a very good definition that has been brought in. The other definition which has been brought in is there is no definition because all this public interest entities was all defined under the Companies Act. It was never defined under the Code of Ethics. But the Code of Ethics 2019 brought in the specific aspect of the PI as a defined entity, a listed entity, an entity where it is regulated under legislation, could be NEFRA, could be RBI, could be IRDA, could be anybody else, where the independence requirements are required to be complied with. I think these are some of the things which should be included. So therefore, if you're doing a C&AG audit, if you're doing the bank audit, if you're doing an insurance audit, or if you're doing any audit under the NEFRA, will now come under the definition of public interest entity. It is not only relating to the listed entities, but it also relates to all of these. And therefore, what is important? While there has been a report from NEFRA that more than 1,100 firms of chartered accountants have not provided the list of entities that are covered under NEFRA, under the revised Code of Ethics, this becomes a very critical aspect of it. Let me tell you that going forward, the peer review board, which looks at the providing a certificate to the chartered accountant firm to carry out audits of certain entities may start looking at it if any of this information relating to NEFRA has been included. There is already been a matter that has been issued to the ICAI, and ICAI is under discussion. Probably this is something which we need to probably look at closely. Now, the definition of professional accountant in business is what has been brought in. Chartered accountants have been replaced with professional accountants, and professional accountants have been included in the Code of Ethics under the CA Act 1949. So I'm going to talk about three volumes about it. The first volume that I'm going to talk about is the principle based on ISPA Code of 2018. The next one basically are domestic provisions, whether it's your auditing standards, whether it's your accounting standards, whether you've got any of the guidances, and the disciplinary cases. Let me tell you one thing, as simple as very recently, more than 200 chartered account firms have been sent notices for incorporating a company. Now, why this is important? In fact, you might say that incorporating a company is the most easiest thing, does not require so much of intelligence, so much of understanding. Look at it from a perspective of know your clients. Even if you have to open a bank account, today you need to know your customer or know your client, right? When you have to provide all that information, when you're dealing with any of the people who are coming here to incorporate a company, should we not be aware of it? I think this is where our application of the judgment, the professional judgments will come through it. Should we now get the KYC norm completed for everybody? I think if we have all of that, it will be easier for us to deal with it. So let's look at the Code of Ethics 2019. When you look at the volume 1, right? So the part 1, which is applicable to all the professional accountants, that means whether it is in business or in public practice, is applicable to all. So therefore, it has been divided into part 1, part 2, and part 3. Part 1 basically is complying with the code fundamental principles. You will hear the definition of FPs and conceptual framework. Part 2 is nothing but the professional accountants in business. Part 3, which is probably many of us will be there in the public practice, including the international standards, which is independence for audits and review. And within that 4B is the independence for other assurance engagements. Now, if you look at 400 to 800 and 900 to 999, you will find that this is where the coverage would be there for those people who are in practice. Now, when you look at part 1, this is where I said applicable to everyone. That is section 100 to section 199. Every professional accountant, this is where it's called every professional accountant. That means I can be a CFO in a company. I can be an employee in that company as a chartered accountant. I can be working with everything. Shall comply with all laws. That means the laws is applicable to entirety for the business in which is there. Now, what is the fundamental principle that you need to look at it? The fundamental principles is that if anything which is not applicable, which is not in line, for instance, if you're recording a revenue which is not in line with the accounting standard, then you get covered under that fundamental principles. Now, the question then is, where do I draw that line? For instance, I'm the account controller, I have a CFO, and I find that the CFO is recording all of this, which is not in accordance with law. That's where the section 260 and 360 will come through it, and 260 and 360 will come through it. We'll talk about separately. But just look at from a fundamental principles perspective is, that means it is not only those in practice, but is also for those people in service too. Every relationship that you enter should have the honesty and the integrity. That means every business relationship that you enter, You should never compromise in having a bias or a conflict of interest. That means knowingly, I should not. So let's say there is a promoter, there is someone who's relative of a promoter. Knowingly, you should not compromise on that business relationship. That means if there is a conflict, you need to bring that out. It is also important that you should continue to maintain the professional knowledge and skill upgradation. I think this is a very critical aspect of it. While institute comes through with various, what are called as programs for the CPE hours, the continuing professional education, somehow this has not gone through this process. And I think more and more, we need to start coming up with some sort of e-learning mandatory, especially when it relates to professional ethics and all of that. I think why I'm saying this is important. Accounting standards and accounting auditing standards or account principles, everything is easy to manage. But what is ethics is always we are in a dilemma. We might say, oh, listen, 1 crore fraud, 1 crore in an accounting, in an overall context of 100 crores is not material. It is not the amount that we are talking about. It is about the interest. It's about the biases. It's about not doing the right thing at the first time. That is what is very, very important when we talk about integrity and objectivity. Competence and due care. And if you look at all of these, whether it is your integrity, whether it's the objectivity, whether it's a professional competence and due care or confidentiality, if you have read under the SQC1, under ethics, all of these are included. So therefore, you derive this information from that aspect of it. If I'm a professional, I'm no longer an employee of, even though I'm an employee of the company which I'm working with, but I am being a professional, I have my professional duties to discharge under the ICAI or the regulations that have been prescribed. I think the day we draw this line, and it's a very difficult thing for us to do it, but the day we can draw that line, I think probably we'll be able to get more and more accountability from the company side. If the accountants becomes tougher and tougher, the professionals, the people or the promoters driven companies or any other company that is driving will be more and more upfront in terms of giving the information which is appropriate. Whilst we might as an auditor think that, by asking questions, we have actually got significant information from the company. Let me tell you one thing. Unless we have an understanding of the industry, unless we have an understanding of the entire transactions the company makes, unless we have an understanding of the people that are engaged in this, unless we have an understanding of how the information is captured, how the information is processed and delivered, unless we are confident that information that is generated is substantially true and fair, we will not be able to issue any audit opinion. Just imagine when there are surveys that happens, when there are tax rates that happens, when there are demands that are raised on the company, when there are issues relating to notices which says that the company has not discharged. I think that is where our issue comes up, is on the integrity and all of that. And I think this is where, as a CFO, as well as a person in practice, professional accountant practice, should be able to understand. And if there is a breach of code of conduct, that is where you have a reporting responsibility. So let's look at the key aspect of section 120, which is basically a conceptual framework. Now, for a professional accountant, if we believe that what is our fundamental principles, we looked at the fundamental principles of integrity, objectivity, professional competence, confidentiality, and professional behavior. So if any of that results in a threat to a professional accountant, in such case, the professional accountant should exercise professional judgment, should remain alert and make sure that there are any changes in fact should be given, and should have used a reasonable and informed third-party test. It means that if this transaction has been entered and if it does not stand the test of scrutiny of a third party, does not have the judgment which ordinarily, if any other person would be taken, that will result into a breach of fundamental principle under the conceptual frame. Whenever there is a breach, if you're in a dilemma, you need to deal with it separately. The other aspect of it, which we have to be very careful, whether it's a related party transaction, whether my own brother is working in the same company, or if I'm getting an audit, I'm still working on that. So if you have a self-interest threat or you have a self-review threat, what is a self-review threat? That means I may go and represent the client for an income tax matter. Now you go to the tribunal and you represent the tax matter, and then now you're going to issue an audit opinion. What will you comment? Will you comment saying that, hey, anyway, the client is going to lose it here, let me record this as a liability? Or should I record this as a contingent liability? Because they'll say, anyway, you're handling, sir, you know it very well. Why do you want to disclose it? This self-review threat is a very, very difficult aspect. Self-interest threat, that means you have got transactions with your known people. Whether you could be, or you become the auditor of a company where one of your relatives has got significant influence. Or an advocacy threat, that means where you go and represent, where somebody goes and says there's something that you've got client, they're doing very, very well. If you want to raise any business with them, we are there to guide you, we help you. The advocacy threat. Or the familiarity threat. That means you know the client for long, and then the client says, why are you coming now and asking this question? Typically what happens is, and this is you will be experienced with many of your clients, when you're going and then you change your team, and the team, or you become the partner, and now you say, because of these things, you've started asking questions. The first thing the client will ask, what has changed between last year and now, or how many years? Why do you need to look at it differently? You can't say, no, you're asking too many questions, you can't do it. You can have an intimidation threat too. An intimidation threat is saying that if you don't sign today, if you don't do it, I will change you. I have got another chartered accountant who's ready in waiting. He will come and sign the account. I think these are some things you need to look at it. Whether any of the self-interest, self-review, advocacy, familiarity, intimidation results into affecting the compliance of one of the fundamental principles of the code of ethics, of the objectivity, professional behavior, competence. I think this is integrity. This is where we as professional accountants should start looking at it. So when you're evaluating threats, right, what are the things that you need to look at? When you evaluate, you should see leadership with an ethical behavior. Does the company have an ethics forum or an ethics committee which will deal with such cases? That means call the systems of corporate oversight. Or you received certain information, you had certain information. Typically what happens? Whenever we do an audit, we'll say, hey, no, this CFO, I know he'll never do anything wrong here. And this company will not have guts to do anything. So we have this always behind that, we always advocate saying that, well, listen, I know this client very well before him. We are not willing to look at the new information. So what is important for us when you're looking, if let's suppose somebody says this is a threat, please look at a new information that can result into a new threat. And when you have a threat which you have got, you should first look at the circumstances, including interests that are creating threat, apply the safeguards to reduce the threat, and end or decline the specific professional act. Look at it. First of all, you have to evaluate as a professional accountant. Second is apply the safeguards to see, by putting this in place, can I reduce safeguards can reduce the threat? Even if you say this is not working, should I now start looking at whether should I end this, or should I leave it, or should I decline? I think there is a mechanism that we need to follow each of them. So what are the key considerations for, and similar for an audit, review, and other? See, just imagine, we had audit and reviews. Other assurance engagement also we need some. Whether we are independent of as professional accountants, does independent standards apply? Are we compliant with it? Do we use the professional skepticism? Are we in compliance with fundamental principles? You know, this professional skepticism is something which we have been hearing it time and again. But trust me, professional skepticism is there for long. Professional skepticism is not saying that this guy is a fraud or that guy is a fraud. Professional skepticism is where whilst you might trust, you still have to verify it. That verification that it is corroborative, it is not supportive. There is a difference. What do we seek? Whenever we go for an audit, we take sufficient, appropriate audit evidence. But what we don't look at it, sufficient, appropriate audit evidence is the nature of transaction itself. It is not the supporting documents that you get it as part of the testing. And this is where our skepticism should be defined. If, let's say, if you see any analytical review, sometimes you see the work papers. Why did the cash go up? The cash went up because the sales went up. Why did the receivables go up? The receivables went up because the sales went up. Credit sales went up. Is there a relationship? Is cash is only due to receivables? Is the cash not due to monies raised through equity or through loans? Is the cash high not because, is it not due to that you have not paid the creditors on time? I think we need to start looking at much more holistic. Let's say some companies make huge profits, but they'll never have cash balance. Is it the nature of the business? Have you looked at the borrowings? Have you looked at the working capital management? What have you looked at? That skepticism should be there, whether you are in having it as a professional person in practice or a person in assurance or in audit or review engagements. The skepticism is you need to get the entire information, the environment in which it's operating, understand the industry, understand the control mechanism that is operating, and then apply your principles. Putting a tick does not mean we have carried out an audit. And I think this is something which we need to be the fundamental for an auditing standard or compliance as fundamental principles. Now, these are certain things which are applicable to the people who are in practice, who are in service. So let's look at people who are in service. Now, the fundamental most, we need to still comply with the FPs. So the fundamental principles remain same. So there's nothing which you can do. We have talked about time and again on the conceptual framework. So the conceptual framework is applicable. Conflict of interest is applicable, not to allow. I know he's my friend. He's got great contracts. I have my friend who can raise finance. I have my personal friend who is an auditor who will carry out audit. He will tell whatever he will do. I have this person whom I know, he will do whatever certification he wants. If there are any conflict of interest, as much as for the professional in practice, you have conflict of interest, a conflict of interest document has to be signed by the professional accountant in service, because that's the only way to demonstrate. Preparation and presentation of information. Lot has been talked under section 134(5) that who is responsible for preparing the financial statements or information. Now, typically, if everything, the sailing was good, we would require a different aspect of it to deal with it. Because we always have challenge whenever we do an audit, we are always under pressure to complete an audit. This is where we need to have transparency from those people who are in service. trust me, who is the person who knows everything in and out of the business? It's that professional accountant who is working there in that company, who is preparing the financial statements and producing the financial statement to the auditors for audit. This is a very critical aspect of, if you are an employee of an organization, it is not about a job alone. It's about complying to the conceptual framework or the fundamental principles that because of you, some other professional accountant in practice may run into a problem. I think it's important that the professional accountant service should not mislead or influence. Always a professional accountant should upgrade his knowledge. We have this continuous issue of the members in industry not attending. Now, let me tell you, in members in industry and employment, we have all of the CMIs which are there, Center of Excellence for Members in Industry and Practice and Employment. But the point is, you might say we are not doing enough for the members in industry. Why not the members in, because with this changes in this, and I think the institute should do good if we take this information and saying, hey, listen, you need to make, we need to make this mandatory, you need to run through this information. I think that expertise is what will help. Expertise is not to mislead the professional practice. Expertise is to know, understand, and guide the company in the right direction. Key financial interest compensation incentive linked to financial reporting and disclosure. Now, we have heard cases of some of the companies where you do insider trading or you pass on information to your personal gain. That means you might pass on to your relatives and say, hey, listen, you invest this today, my profit is going to go up. I'm going to have what is called as, and we are entering into a joint venture. This is the amount that we are selling. Go ahead and offload your shares or buy more shares because you're going to get at this value. This is a very fundamental ethics concept. If there are anything that is related to, for instance, gross profit or a net profit or tax savings or cash flows, if the finance team says, let's not make provisions. In fact, this is the biggest discussion that you have happened when you are at with the year-end audit. The accountant says, sir, I've already circulated to the board, sir, we cannot change any figures. If anything, the next year we will see. If that is linked to his key performance indicator, because that profit will determine his salary for the next year, this is called manipulation of information for personal gain. Why am I laying emphasis on professional accounting and services? Because whatever has happened today, whatever has been happening across the news, it's only for those professional accountants in practice, not those professional people in service. If you are an authority with all of this information, why should you not inform the professional accountant in service when they are in practice when they're coming to do an audit, or guide the people when that is there? And that is the reason why Section 260 is required to be made mandatory, not for anything else. It's because that more and more professional accounting service comply to this, more and more value add the professional accountants in practice can do it. Otherwise, it's only going to be one side, not the other side. Shall not offer, encourage others any inducement with an intent to properly influence. That means no gifts and hospitality. Let me give you an example. In India, if you have to operate with any of the agency, whether it's your income tax, your GST, your VAT guys, your service tax, erstwhile service tax, your custom guys, excise of anybody, or your property tax, your local authority, anybody. If you provide any money to them, whether it's in the form of gifts or hospitality, the question then is that a bribe in the nature which should come tantamount to a fraudulent transaction or to be reported as a fraud under Section 143(12). I'm telling you, this is very important. If you recall, in the the Foods and Drugs, the Ministry of Drugs especially came up and said, listen, there are few pharmaceutical companies who started bribing officials. Now, let me tell you one thing. If anybody deals with pharmaceutical companies, getting a drug license is the most difficult thing. And nothing, file doesn't move without this getting done. Now, having said this, now if your company name is there in the forefront and the company says, I have not done anything wrong, and you are the professional accountant in service, how would you deal with this? This is the most important aspect of it that needs to be looked at. We always have the fundamental pressure to breach the fundamental principles. But trust me, we can go on speaking about what is right. What is important is what is in practice becomes very, very critical. So let's talk about these two sections, section 260 and section 360, which has far-reaching implications if this were to be applied. Somebody always says that, Ganesh, you always give a story of horror. I said, it's better to watch, it's better to listen to the story of an horror rather than facing the horror itself. I'm telling you, dealing with any agency is, nobody should face it. Let me be very honest, whether it could be your ICAI, whether it could be NEFRA, whether it could be anyone, you should not be on that side. Even your enemy should not be on the side, because it's not the person who suffers, it's the entire family that suffers because of certain things. Ultimately, it's what do you gain is versus what you lose is what needs to be evaluated when we are dealing with the situations. We can always say it's like this. When you're driving on a highway, it might say, listen, watch in front, there is a curve, there is this one, your speed should be there. You might say, hey, listen, I'm driving the best of the cars, which has got the airbags. And I can drive, I have the expert, I've driven in fast track circuits. It doesn't take more than a second to take off a life. So the point is, as good as non-compliance with laws and regulation is as critical for any professional in practice as well as in service. And I think this, we need to deal with it very, very carefully. So section 260 refers to any act of omission or commission committed by a client or employee contrary to prevailing laws or regulations. Okay, this is for the people who are in service. Need for NOCLAR, recognizing that such a situation can often be difficult, stressful for a PA, accepting there is a prima facie ethical responsibility. This is where this section has been introduced to guide him. Laws, regulations, ethics, policies, requirements, there's so many things. Everything plays in point. The first thing plays in your mind is, if I don't listen to my boss, I may not get salary. I've got my loans, I've got my this things, every month this falls in if I don't have a job in hand. It's a financial dilemma. It's a personal dilemma. But if this is what the law expects you, if this is what the code of ethics expects you, what should you do? Not renew your chartered accountancy membership and say, what, let me do an equivalent of this is CPA and then comply with it. These are some things which you need to start thinking at. If you're looking at that side, that means you will continue to do what you want to do. Now, at the moment, it is applicable to only listed companies. It's applicable for audit engagements, and especially for those professional accountant service, applicable to the employees of listed companies. So, in other words, listed companies, audit engagements, not assurance engagements, and relates to people who are in practice on service if they are in listed companies. So right now, the applicability is this, but it will not be far away than the applicability for the entire audit and entire people in service. Now, there is the scope of, the laws and regulations have got a relationship, whether it's a professional accountant's training or expertise. Now, why this is important? Let's say one of the cases, if you go and see any of the contingent liabilities, or if you see any of the litigation that happens, outcome may be decided in a court, but you will be able to determine that which way the amount could go, or which way the case could go. Under those circumstances, if you have that knowledge, should you not include that and discuss it? Typically, the discussions between a professional accountant, a CFO, and a person in practice, he says, "Sir, this is a problem, sir. You come back and tell me what is the solution?" With no NOCLAR, the issue is not was with the professional person in practice. With the NOCLAR, the professional accountant's practice should say, "Hey, listen, sir, first of all, you evaluate and let us know whether you have provided all information. And then only we'll be able to evaluate." I think we need to start juggling between what is each one's role. Suppose the CFO says, "Sir, if you don't provide this, I may have to look at it because my management is looking to change the auditors." Does that mean it is an intimidation threat? Saying, "Hey, listen, you don't look at it and therefore I do it." I think if you have such situation, you should raise voice as a professional accountant in practice. And I think this is where we need to start doing it. See, many companies, in fact, not many companies, many chartered accountant firms started resigning over a period of time, especially in those shell companies, when such shell companies were determined, or where there were related party transaction which was not justifiable. Now, with this NOCLAR, how will you go and verify? So let me give you one example. Pollution certificate not renewed. Factory license not renewed. Contract with Minimum Wages Act not done. Compliance with Payment of Bonus Act not done. Paid bribes to people, part of the business. Now you know all of this as professional accountant in service, right? How are you going to deal with this? Proceeds of crime. You know you're rerouting all the transaction. You're structuring a transactions, you know it. All of these will have an implication under the ICAI will have an authority to call for information and impose whatever the discipline mechanism it is done, whether it could be a financial penalty, whether it might say, "Hey, listen, this is the first time, be careful next time," or it might take away you from the membership. But the one fundamental principle now, at least through this section 260, the ICAI will have an arm to oversee the professional accountant in service. And I think this is where the institute, through the Center of Monitoring for Industries, should start looking at and discussing it much more with the industry people and say, "Hey, listen, please look at this aspect of it, which brings in your responsibility to make sure you make adequate disclosure. Make sure if you run into a problem, we are there. Please address. These are the redressal mechanism that you have." And therefore it is. But then the question really comes up, you may have this mechanism, you have the job. That's another dilemma which we can go on dealing with it. But I think this is very, very important when we're talking about it. But sometimes matters which are inconsequential, matters which relates to personal misconduct, matters which is related to non-compliance by client or employer, those which governance, something which is beyond you are not in the scope. It is what is within you is what is in your scope. Because you are responsible to report to SEBI if you're a listed company, if there are any fraudulent transactions. I think this becomes very, very critical when we're dealing with it. The next couple of slides will take you through the entire section 260 and 360 as to what it is. It'll talk about how do you guide an accountant in assessing an implication of a matter of non-compliances. Whether a laws and regulation has a direct impact on the determination of material cost. This is a very important aspect. It is not the auditor's responsibility to every time go back and then say, listen, you tell us what should be the, how will you determine. No, it is a professional accountant in service who is in charge of that. Whether it could be a financial controller or whether CFO, whether it is DGM or a AGM or whoever it is. If he is a member of the Institute of Chartered Accountants of India, he will be called as a professional accountant in service. Next, you should also see that by not providing information, does it result into an impact? So let me give you an example. Simple example is, I have an arbitration settlement. If I put it as other income, it will say I have made a loss at the EBITDA level or at the level where I am reporting to the business, to the those charges. So I'll say, sir, what I will do is I don't want to show it under exceptional at charge. Can I take it as part of operating income? Sir, anyway, this arbitration, everything is part of the business. So therefore, it is only as a part of the business that we have got. That is my settlement, sir. So please consider this as part of revenue or other operating revenue. Now the question then is, why did the arbitration happen? Did the arbitration happen for the performance of the product or service? Does the arbitration happen because of the non-settlement of financial dues? Does the arbitration happen where you have delayed substantially on financial amount for which you are asking for interest? If it is interest, how is it a business? It is only a settlement of a financial transaction. Is it due to inefficiency, or is it that there is a firm commitment that you had given and you have not taken the stocks and therefore you need to make good for that? So therefore you have a committed operating facilities or capacity that you have built in. So therefore you will get that money. This becomes a judgment issue. But you as a professional accountant in service, would you not be aware of this? I think this is where we need to do. I think we as chartered accountants in practice or professional accountant in practice, the ICAI and everybody at each forum should go and educate, say, listen, this is coming to you. Please understand and see if anything can be done. So therefore there is much clarity. I think that becomes very, very essential, because 60% of our professionals are not in practice. They are in service. And I think that is what is important. When you respond to a non-compliances, first of all, you should see, am I doing it with integrity? I have taken the first step and alerted the management and said the management, listen, this is not the way we should rectify it. And if you believe, now for instance, I'll give you another example where it is easier to relate. One of the examples that you can go and relate to is that you've got bank, we have got this CARO 2020, where you have to submit the stock statements. When you're submitting stock statements, it should agree with the books and accounts. But now you know that if you close the books of accounts, you will not be getting the working drawing limits, because any adjustment may have an impact in the drawing limits or a drawing power that you have to draw from the limits. And therefore, what you say, sir, this is from this book. Anyway, chartered accountant in practice or professional accountant practice are going to certify it. At that point in time, let me wait and see. Stocks are not reconciled. You take next 10 days revenue and put it as part of your receivables. Purchases you don't record. expenses you don't record, and then say, this is my drawing power. And you draw that money. Simple example of as a CF, as a controller or a finance accountant, when I go and deal with it. Or there is a litigation that has happened, or let's say there is a dispute with a labor. You have finally reached out to a settlement, and you know you have to provide for about 10 crores. Your profit is about 8 crores. What do you say? Sir, right now it is still under discussion, sir. It may be 10 crores, it could be 5 crores, it could be 2 crores, sir. But we don't want to take credit of it, sir. But we want to wait till it is finalized. This is where the integrity and professional behavior come. This is where you need to look at it. Does this result? Because by giving an information, by not providing 10 crores into the books, has resulted in a situation of profit of 8 crores. Is this a behavior that needs to be addressed at the CFO or the company level? I think this is what is very, very important. Whilst you might say, sir, when will this happen? It will happen when the section is implemented and when the first casualty happens. The first casualty happens, that's where everybody will start awaking and say section 260 was there. It was not complied under section 260, and therefore professional accountant in service is in default with ethics. Educate first. Tell them the implications arising of it. Then it becomes easier to do. Now, if there are any non-compliance with laws and regulations, especially relating to omissions and commissions, intentional or unintentional, which are contrary to the prevailing laws. It could be intentional, it could be unintentional. So let me give you an unintentional part. There is a dispute with the customer, and the customer has sent a legal notice claiming for X amount as damages. The legal notice has come to the company secretary. The company secretary team says, listen, I've got this notice, but the CFO says, let me discuss with you different. But the legal notice has got saying that, listen, if you don't respond to this, this is a penalty that you will take a judgment and say as a CFO, I said, listen, I have got this after 31st of March. Events occurring after balance sheet date or reporting date. Does it have an implication? If it does not have implication, you might say, listen, if it has implication, we will see it after some point. But the question then came up is, did you discuss with those charged with governance or with the management saying that this could be an impact? Now, this is something which is very, very essential. And I'm telling you today, half our problems as professional in practice will solve if the people who are producing information and producing information to the auditors to certify provide a true and fair view, not true and fair, provide a true and correct view or true correct records. Only then this non-compliance issues can be resolved. Otherwise, we'll still be debating on professional judgments and non-professional judgments and estimations as on the basis. Now look at the responsibilities of the employee, right? It is not only the professional accountant service, it's also the management responsibility to identify if there are any things which is contrary to complying to laws and rules. And this is where a professional accountant should take that responsibility and comply and report on a timely basis. We may say that there are more than 4,000 laws and regulations which we need to comply with, but it's also important that we should be aware of which are the ones. For instance, you have not paid the professional provident fund dues or ESI dues, or you would say, listen, let me not pay the income tax, advance income tax. Anyway, we will wait till September and pay because this money I can utilize it for any other purpose. Intentional, unintentional. This becomes a critical aspect. The other important aspect of it is that there is a distinction between senior professional accountant in service, which is called the CFOs, and the professional accountant service. So that means it is not only the responsibility of the CFO, but the people who are member of the institute, who are professional accountant service, should also have that understanding of compliance or non-compliance relating to any of the laws and regulations. What is the potential impact arising out of it is what has to be talked about. Now, for instance, if you take real estate companies which want to be under the RERA Act, they should be registered. Knowingly, some of the real estate companies are not doing it because they need to complete with a particular period. Revenue recognition goes as a dwelling unit because you have to pay interest if you don't comply with it. So therefore, they are out of the RERA. So they want to do it outside of RERA. Because if you do it, these are the implications, therefore you do. So if there are any such instances where a decision has been taken, that is what has to be told to the authority, that this is the manner in which we have done. It may be right within the ambits of law. That doesn't mean it's non-compliance, but it is within the ambit of. Or I purchase intangibles. Let's say it's a pharmaceutical life sciences company purchase pharmaceuticals. Now this licenses are intangibles are no longer valid. But what do you say? No, sir, not today, but tomorrow definitely I will have a market. So don't make up any provision for or amortize that intangible that you're carrying in your balance sheet, or impair the goodwill that you're carrying. It's an issue relating to compliance to accounting standards. And that is something we need to start looking at it from a compliance perspective. How do you address? First of all, you should go and discuss with those charged with governance, look at the compliance with laws and regulations, look at what is the risk of reoccurrence, is it a one-time or a continuous, or take effective steps to comply to this non-compliance or remediate it. All of these should be a part of the process. So therefore, what is important is that whenever you are looking at matters at a senior level, you need to first address it. If there anything remedial actions are available, please apply that. Look at that the chance of recurrence is reduced, and always see that such instances of non-compliance is not encouraged. I think these are some of the things a professional accountant, senior professional accountant should do. Now, what is important for all of these? It is important that this accountant should make sure that the response is timely. It is with the appropriate authority or the authorized person, and all of the information that are relevant are disclosed. Now, why this is important is because today we are focusing on listed companies or the public interest entities. This will be applicable even for a statutory auditor, because he is applicable for the statutory audit that is carrying out. There it never said it is applicable only for statutory audit of listed entities. So therefore, the statutory auditor, if you are an auditor, it is applicable both for listed as well as unlisted companies if you are a statutory auditor. Seeking advice, taking legal consultations, discussing internally, preparing in case if you believe that it is not in line, you may write to the institute and take a direction from the institute. I think this becomes a critical responsibility of those professionals when you're dealing with the non-compliance to laws and regulations. Any breach has to be reported, otherwise the professional accountant in service will have implications. Now, this is a new thing that has been introduced. Every issue that the professional accountant encounters, he should discuss and document it. He has to write it down and see what has been discussed, what is the nature, what was the discussion with this one, what are the actions taken, and how it is satisfying. You can't say that I have discussed, I've told them, this is what is there. This documentation, and this is quite surprising under section 260, because you're now saying you have committed a crime, take this committed crime and document it and say why this crime is not a crime. I think this becomes very essential, because tomorrow anything goes wrong and the professional accountant says, I've already told. If you have told, what are the things that you have done? What is the matter? The results of discussions, including those charged with governance. If you have any accountants who are superior, what is it? What is the course of action considered? What are the judgments made? How are you satisfied that whatever is set out under this section 260 relation to the issues to be reported have been compliant with? I think this is a very important aspect that has been included. You have senior professional accountants, you have other than professional accountants. The discussions remain the same. It's only the manner of reporting which goes up. From professional accountant, senior professional accountant may go to governance. From an accountant, it'll go up to the level of the senior professional accountant. Here also, you have to include all of this superior management documentation, everything should be there. This is as far as the professional accountant in service is concerned. And this is a very critical change that has been brought. Let's look at responding to non-compliance with laws and regulations, section 360. Right? This is where the professional accountants in practice have to look at it. Conceptual framework is already there. You don't undergo any change. You need to look at it. But all of the threats, the self-interest, the intimidation threat, familiarity threat, all of these self-review threat, all of these needs to be looked at very, very close. If any of the professional accountant, that means when I'm saying professional accountant means in practice, comes up and says what, this might result into a non-compliance with laws and regulations. So let's take an instance of the US company has banned the transactions with the Russian companies because of Russia-Ukraine war. Now, your clients where you're auditing has got substantial transactions with the Russian entity. The question then is, and your entity also supplies, where you're the auditor, also supplies that material to the US entity. The fundamental principle that comes up, whilst you might say, we had Jay Shankar, he was a great speaker, he's a great thing, he said oil business, he's a oil diplomacy, is all he has done. But if you are an auditor where you have to evaluate it, you need to evaluate whether it's a non-compliance, whether the issue relates to going concern. These are some things which you need to start looking at it when you start applying to non-compliance with laws and regulations. It is not saying that a management represented, there's no issue, sir. I have taken the money, I've supplied the money, all of this is done. The issue there is there a non-compliance to laws and regulations? Does this impact the financial statement in terms of liability? Does this impact the going concern of itself of this entity, even though India might still permit to do transaction with the Russian entities? It's a very critical aspect of it when you have to see, does it have a direct effect on the determination of material amounts or disclosure in client financial statements? If it is not, you please prepare a document, look at each one of them closely and then address it. Because when we deal with as professional accountants in practice, the focus has been from an act in the interest of public interest. Our responsibility is towards the public, not towards the company which appoints us, not to somebody else. So this is again, let me put the distinction. Our responsibility for the financial statement still continues with the board, then shareholders. I'm talking about this responsibility of non-compliance from a public interest perspective. This is from an ethical principles perspective. Because in our auditor's report, what do we write? We have complied with all ethical principles issued by the Assurance and Auditing Assurance Standard Boards of India. And we are, when you write that, from an accountability of ethical principles, did you comply with that behavior? Did you seek the explanation from the management? Did you ask the management to take steps to comply with it? I think this becomes a very, very important aspect. A non-compliance could be a client. It could have been committed by a client or by the members of the board or by the management or any other person in the direction of client. Can it be anybody else? So you might say, sir, why do you need to pay bribes to people? Appoint an accountant. The accountant will make the money, and therefore you don't have to bother about non-compliance to laws and regulations. And let's say you're aware of this. So you have an accountant, you have a statutory auditor who's paid about 10 lakhs, and there's a professional consultant who's paid 1 crore. So let's look at from an assessment perspective. He's a firm with about 5 partners. Their business is not much. They have about only 2 or 3 people. Or let's say 20 people, let's take an instance. The question is, why did you pay 1 crore to a person with such a small firm? Or let it be a larger firm also. Why did you pay such a huge amount? What is the report that comes out for giving that? Does it say to give advisory on taxation matters? Does anybody provide 1 crore of rupees to provide for advisory on taxation matters or compliance matters? Is he a retainer? What is the nature of the retainership? What are the things that he delivers it? How is it measured? All of these questions will come back in terms of compliance to laws and regulations. Somebody might say, sir, please exclude bribes and all this government, because without which the business does not run, and therefore we cannot have any control of it. Now, unfortunately, ethics is not applicable. This section 360 is not applicable to the company. It is applicable to the professional accountants. So therefore, what you need to start looking at it more closely is, if such incidents comes up, how do you deal with it? So therefore, you need to start discussing with the client, with those charged with governance, with the members of the management. Everybody you need to start discussing and say, hey, listen, this could be a potential non-compliances. And every non-compliances could have a response. Then therefore, what could have happened? What can you do it? You might say, in respect of certain transactions for which an amount of X was paid, we as an auditor are unable to obtain sufficient appropriate audit evidence. And to the extent of this, subject to this amount of these things, the accounts gives a true and fair view. Look at this change. Your authority or your responsibility of reporting goes through this mechanism. And that's the responsibility of a professional accountant. Because without understanding the matter, without going through the matter, it becomes very, very difficult to identify what are non-compliances or what is the understanding of the suspected non-compliance. A non-compliances could be, the company should not discharge effluents into the water or the river water. You know very well that if they're in, because of the Environment and the Pollution Control Board, that any company which discharges X amount to the river, which affects the entirety of the people surrounding the village or disturbs the habitat of the people in that particular area, can result in the factory getting seized. Great example of Tuticorin, where the copper plant was shut down. So the question of then the issue really comes up, do we as professional accountant practice understand the business in which the entity is operating and understand the laws and regulation governing? This is where section SA 250 will talk auditors' considerations in compliance with the laws and regulations in which the entity is operating. or the environment in which it's operating. It is also important whenever you're in this, when you are in doubt, do a consultation. And a consultation could be within the firm, within the partner, with a senior partner, with a network, with a legal counsel, it could be anybody else. But it's also important that you consult with, again, somebody might say, sir, I don't have the money, I don't have the ability, I don't know what to do, I cannot do it. Then write to the institute. But sir, if I write to the institute, I may lose the client. This is an issue. There are two ways to deal with it. You might say, I want to take the risk, so therefore I don't care what will happen, I'm fine with it. The other way around it, sir, I may lose a risk, I have a risk of losing a client, but I'll stay for my integrity and for my professional behavior. And I'm sure with my expertise, I'll get more business. So the choice is on the professional accountant who has to look at it differently. Addressing a matter again goes through the same thing: rectify, remediate, mitigate, deter the commission of non-compliance, all of this which should be there. Again, laws and regulation, including everything, should be looked at. The profession shall comply with applicable relating to legal, regulatory, suspect and non-compliances, auditing standards, identifying responses, communication with those charged with governance, everything. And why this is important is because if you don't comply to all of these and anything happens at a subsequent point in time, could have a potential harm, not only to you, not only the company, but to the people who are relying on the reports. And I think this is where the Section 360 is heading towards. Now, if you have a suspicion, what should you do it? You may discuss with this, you may talk to the accountants, you may keep the client informed, and then listen, we are going to provide this information. You cannot directly go to the media and say, hey, listen, I'm resigning this client because they're defrauded, and I can't go to my Facebook like the way we do it for in any bank audit, the branch audit. If the central auditor does not agree, you go and put saying that all this information is provided to the central auditor, but central auditor did not even bother to include as part of the memorandum of information, as memorandum of interest. Now, the question then is, who is appointed you? It's the management or the shareholders of the entity. You're supposed to disclose to them, and if you've got a reporting responsibility to ROC, you should comply to the ROC. If you have a reporting responsibility to the ICAI, you have to report to the ICAI. These are some things which is required as a part of the disclosure to the appellate authority. Documentation is critical, again, both under Section 260 as well as under Section 360. What is important is, even today, what will protect you is SA 230, right? What will protect us under Section 360 for non-compliance of laws and regulation is, what is the relation to non-compliance or suspected non-compliance, how management and those charged with governance responded to you. If this is a matter, what did you raise? How did they respond? What are the judgments that were taken, and what is the information that is available, and how you are satisfied with the compliance under the response. Because without having an understanding of the significant matters, without arriving at a conclusions using the professional judgment that have been included, and discussing with those charged with governance and with those entities management, you will not be able to conclude. So therefore, your memo or a documentation should have nature of matter, issues raised, issues discussed with entity management, issues discussed with those charged with governance, issues arising out of that discussion, and what are the literatures that are available, what are the considerations that the accountant did, and how have you concluded on that matter. It's as simple as that. Somebody might say, sir, if I have to do all of this, do I need to do the audit itself? It's a very important point. But we are called as auditor. We have to be proud to be an auditor when we do all of this. Okay, so the host, all of things which I've already discussed, I'm not going to repeat it. This has been deferred, as I said, but it is deferred up to 30th September. Now, after 30th September, 1st of October, what will happen? We may have to look at all of this. The other important aspect of is NOCLAR relative size of taxation, tax services and relative size. Again, this is very important. While it has been deferred, this might come into place because Ministry of Corporate Affairs is coming through a different thing. Maybe ICAI might declare up saying that, listen, for small firms, this might be excluded, but for the larger firms, which could be covered under any of this, whether it could be a tax audit or it could be under the limits which would have been imposed for application of Ind AS, or for that matter, which is included as part of NEFRA entities, they might come up, but this is something which may not come up for the small firms now, but at a later point in time, it might come through it. But please make sure that your size, because it's been reduced to 15% of the overall fees, and that's very, very important. Taxation services. If you look at taxation services, majority of the businesses come through taxation. And this taxation is where is becoming an issue for the smaller firms, because the larger firms, we can still get away from the taxation and do provide services to non-audit clients. But majority of the businesses actually come to the small firms only through taxation. And I think this is where the institute is looking at much more holistically. I think most likely it would come up with certain guidelines where certain firms could be excluded. They can still continue to provide taxation services, but there are certain restrictions what you can't do. You can't be representing on behalf of a client. You can't be preparing some sort of a drive, or you can't be representing it. I think these are some things which is in the role of a management. Probably those could be excluded, but other than that, filing a return of income or doing a transfer pricing or doing something else could be a part of the taxation services. So what are the key requirements of professional accountant public practice? Again, opinions. This is a very important aspect of you need to look at it. You know, many of the chartered accountants, many of the companies go back to some of the chartered accountants, as I said, give me an opinion. How can you give an opinion on an account under what authority? The only authority that we have is only through what is called as the institute, and especially the expert advisory committee or the FAQs that are going through it. Again, that again provides saying that it's the individual responsibility. Second opinions are something which you should not do it. And if there are any restrictions of not permitting to communicate with the earlier or predecessor's account, you should not accept the client. I think this is a very important aspect. As professionals in practice, a very good ethical behavior is that it is not about what we got, how much business we got. It is about whether we have done at the right time. In fact, you know, some of the clients, if you really see, you know, take them for expert advice, and suddenly they find that, you know, your auditor who has got it, that guy says, you know, anyway, he does not have, let me employ him as our auditor. I think this is something which is a very important aspect from an ethical behavior perspective. Whichever firm is involved in supporting the smaller firm should not and shall not take the audit of a smaller firm. And I think this is an non-ethical behavior that has been, while it could be practiced in terms of, let's say you're tendering for a concurrent audit, a person of 1 year or a person of 5 years, a person of 20 years with 30 partners can also come and compete with. I think somewhere we need to draw this line of this not accepting engagements which will allow the younger the firms to continue. Fees contingency, there are contingent fees. You cannot accept contingent fees except that what has been defined and excluded, whether it could be evaluation services, where it could be a success fee in relation to any of the liquidations or banking or anything of the valuation under the Income Tax Act. There are certain things which are excluded. The other aspect which should not be is inducement, including gifts and hospitality, prohibited. You should not accept any gifts. You should not induce any of the close members to be part of that whole process. That means, let's say Diwali is coming, so I have got my business, so I have my cousin who's running it. So I tell my client, listen, if you want me to complete this by this time, my client is doing it, please supply him and we are fine with it. I think these are some things which you need to be very, very clear. And the other aspect which has been brought in, which is going against many of the smaller firms, is not withholding of records for non-payment of fees. I think this is a clear no. You cannot withhold. There are cases which are sitting under disciplinary where some of the chartered accountants were holding the records of the clients. The response, see, as much as we say it's a management responsibility to prepare the books of accounts and maintain the books of accounts, we should not hold anything on the contrary to it. In fact, there was one instance where the chartered accountant the professional accountant in practice brought the laptop software and he was running the entire programs. Suddenly, the client wanted to change this person to another person, and the professional accountant said, I will not share any data because that is my confidential data, because it is on my system, it is on my software, I will not share it. So this is another instance which happened. I think we need to be mindful about it, that the custody of client assets is a threat from a professional behavior perspective. So what are the other independence for when we start looking at some of the aspects relating to both audit and assurance? And this is very, very important. Again, independence is a behavior. Independence is something based on action that you take. You cannot be a statutory auditor, you can't be an internal auditor. You can't be an internal auditor, you can't be a statutory tax auditor. You can't be a internal auditor, can't be a GST auditor. Each roles are different. So independence for audit and review and independence for assurance engagements are completely different, but majority of the sections complies to it. There is the introduction of public interest entity in the section 400. Again, independence rules are again defined under section 141 of the Companies Act. There is a period in which the independence have to be maintained. There is a communications to be done. What happens in case of a breach of independence? How do you communicate to those charged with governance? Because all our work is based on trust. And whenever we have a trust, when we lose that trust, that's where the independence gets impaired. And I think both in mind and appearance is what independence have to be looked at. Now, if you look at some of the framework where it talks about independence, you might look at IRDA Act, SEBI Act, CA regulation, council guidelines, public interest, and all of that. Fees, and again, this is a very important aspect of it. Always quote our fees, which is commensurate with the nature of work that we carry out, the size of the entity, the risk that are associated, the complexity of transaction, the number of hours that are required, the number of people are required to undertake it. Just don't undercut a fee to get a business. A business has to get, see, if you have to really quote for a fee, talk to the client saying that you are paying for the professional services that you're rendering, not other ones. Now, one of the bigger challenges that we keep seeing is the fees remaining overdue and remaining unpaid. We have to be mindful of this aspect of it, because your own professional brethren is not getting paid and we accept an engagement. I think even before we accept an engagement, we have to make sure that the predecessor auditor is paid with all dues. And I think this is a very important aspect. The other aspect of it also is that if you're carrying out an audit without getting that audit fee paid, or you might say, I will get the audit fee paid, only then I will do it. I think one of the fundamental principles which we need to look at it is, when you accept a client and when you continue to a client under the SQC1, which says that at the end of the year, you need to evaluate whether you need to continue with the client. If the fees are not received, you should not continue with the client. But the fact is that we still continue with the client because we expect the client to pay the fees of the earlier period. This is a threat to independence. This is called self-interest threat. This is something which is no under this part 4A and of the revised code of ethics. The other aspect of it, which is very important, is again, I mentioned to you the key audit partner. Please do not pay, the firm should not or shall not pay any of the partners based upon the nature of the business that he brings to the firm. You might say, somebody might say, today my name sells, that's the reason we are getting business, so therefore I should be paid more money based upon a percentage. I think this will be a non-compliance, and this is again re-emphasized in terms of it. Holding of interest, we should never hold any financial interest in any of the clients. So the independent rules are very, very clear. We should not have business relationships which will create a conflict. We should not have any relationship with a client which will threaten into what is called impairment. So these are applicable both for the interest held by the firm, by the network firms, and all of this. Mechanism self-correction is very important. When you identify a breach, make sure that either you resign or suspend or eliminate it or don't accept it. So this becomes very, very critical. These are the 4B, which is gives a long association and all of this, which I'm not getting into it, but this is again applicable for assurance engagement, and this is very, very important. So with this, we've come to the end of the Code of Ethics, non-compliance to laws and regulations, section 260 and 360. Let me take you to those ones which are domestic, which are relating to our compliances relating to the domestic laws and regulations, which basically talks about under Companies Act, under CA Act, under various standards, auditing standards, accounting standards. How do we need to deal with ethics? One minute. Let me just stop sharing and bring that. Sorry about that. Just give me a minute. I'll just... Just a minute. If you have any questions in between, please let me know. Let me share the other screen.
If any members have any points or queries, please raise your questions in Q&A.
Just a minute. Let me just open up the others. So it's showing up here, but it's not showing up in the share screen. Why is it not showing up?
You're the host, Kada.
I know. Why is it not showing up? Let me just close this and then open up the other one. Okay, so let me close and open it up.
Right.
Let me just close and open now. 1 minute. Sometimes this is a problem with the, yeah. It's opening now. screen. Yeah, now it's coming. You're able to see?
Yeah, visible.
Okay, sorry about that. So the next one is basically the domestic laws that we're going to talk about. And whilst many of us are aware, because I wanted to spend 2 hours just basically only on section 260 and 360, and this one will not take much time. I'll give you about 30 minutes for us to ask if you have got any questions. Now, when you look at the domestic laws, again, I talked about this is again applicable to the professional accountants in practice, that we need to comply with the accounting and auditing standards, engagement quality control standards. Accounting standards again is between Ind AS, which is again accounting standard rules in the normal accounting standards under 2006 and for the small entities. Standards on auditing, I'm not going more into this, but just an understanding that all auditing standards are mandatory for the professional accountant in practice. It's mandatory. This is our tool. Whatever we do, we need to make sure that whatever guidances, compliances that are required, checklists, everything, we use that. But the question really comes up for all of us is that while everybody understands auditing standards, but everybody understands accounting standards, what really becomes a problem is in the application when it comes to clients. When it comes, because not only that, because you also have today the quality of the people that we get, also we have a challenge. The quality of time, information that is produced from the client is also difficult. Giving all of these standards, one is evaluating whether we need to have the client. Two, evaluate if we have got the client, whether we have the time, resource, and the knowledge and the support that we can complete the audit on a timely basis, and that we are paid under what is required as under for the services that we render, which is equally reasonably well. These are some things which are very, very important. But with the introduction of audit quality milestones, the AQMM by the ICAI, and where it requires rating and all of this, I think these are the things becomes very, very critical that we need to start revisiting all the auditing accounting standards. Chartered accountants, again, in practice, brings about it. You can provide all of this financial management, capital, working capital structure. It's talk about when we talk about non-compliance is only in relation where you're doing statutory audit, and that is where it needs to be done. Again, if you look at some of the issues which have been brought in as part of the CA Act for a certification of practice, what you can do, what you can't do. You can, if you are a chartered accountant and let's say you're also practicing law, you can't use both CA and law. It's either CA or you've got LLB. You need to make sure that in your visiting cards, you can't put that you're a director, office bearers, or political party clubs. You have to use that when you're using, you should say either ICAI, you can't use company secretary cost account words. Permission to mention qualification of other institutes is allowed. Certain things are not allowed. ICFA, there are certain cases, but again, that's a dispute which is between institutes that are happening. When can you be a member? When you can't be a member? This again, I'm not getting to it, but these are all something that you be aware of it, which you already know about it. Penalty for falsely claiming to a member. This is really, I think, time we have evolved. It should be 10 lakhs. It should be 50 lakhs. It can't be like 1 lakh, 1,000 and 5,000, because if you're not a member of institute and go and certify, you should actually have the entire, this is actually fraud. You can't see in under the NEFRA rules, you have a time up to 25 lakhs or 3 times of the fees that you charge. Why can't we get this revised? I think time that the institute starts relooking at all this conviction and all of that. And this is exactly why this comes up is also because many of the people write as CA within brackets and certified. I think that's another issue which really comes up. No company shall practice as chartered accountants. It should be the name or the LLP in which they are practicing, and that's where it is. Unqualified persons not supposed to sign, and all of these. I think we need to increase these amounts. Maintenance of branch offices, you need to have everything. There is a number of kilometers and then the time which has been devised by the institute. Please comply to that. Whenever there's a misconduct on omissions of unethical practices, it has been again classified between part 1 of first schedule and second schedule. And for members in service, it's part 2 of first schedule. In fact, I always remember whenever I used to get the green book or the red book, which is now, is that, that is the first thing when we talk about professional ethics and compliances, professional ethics. So members of institute generally need to comply with the part 3 and part 2 of schedule 2, apart from the specific of part 1 for the practice. And other schedules which has to be covered is part 4 of first schedule. And again, I'm not getting into the schedules, but I'll talk about what is very critical within this. Now, clearly, we cannot allow some other person to use the name of chartered accountant unless that person is in practice. Now, we need to be very, very cognizant. Now, many of the chartered accountants who got COP, who are, let's say, have got employment elsewhere in the US, not in India. And the person have got, they probably lend their name. I think this is something is a clear misconduct, because if you have just lent a name without really, and you're working elsewhere, I think it's a clear case of misconduct. And it really happens because, one, from a perspective of, some of the firms wants to get a big, larger client, like a larger bank or a CAG audits, or let's say the person has not passed the exam, and the father has actually been running the practice, and then therefore he gets some other person continue this as a business because he's been working with the same firm, and then he gets some other person. Similar to what we have in a medical shop, right? Somebody holds that certificate and somebody runs the shop, gets paid for it. This is a clear case of misconduct. If you come across any of such, you need to speak out. You can't pay or allow or agree to pay any directly, indirectly, share commission and all of this. There could be a work that can be rendered to a chartered accountant, and he can agree to the share of work that can be done. Could be for a stock audit, could be for this thing, but you should not misrepresent. I'll tell you what used to happen, especially in a QRB situation. Many of the chartered accountants used to get the work people from the other offices or other chartered accountant firms as a part of their working with them. Now, with that changing significantly, this is having an impact where you need to certify whether it is a part of Form 18 and all of this. So just be mindful on this part of it, that whenever you're never get into a commission and all of that. Typically, it happens, especially when you are dealing with any government authorities or agencies, where let's say, is a person who's got retired as from an excise or from a sales tax or from any of this, and say, or from a bank. You might say, okay, fine, you get me the concurrent audit, get me this audit, I'll give you this amount. These are all prohibited. These are not permitted. Members can only share, as I said, with the multidisciplinary model that we have of the firms, you can share it. Again, there is percentages are only allowed for a particular cases. It is not allowed in all respects. As I said, these are all repeated. I'm not getting to it. Secures or either secures or the services of a person who is not an employee of chartered, I've already touched upon. Solicits clients, and I think this is something where there was one instance where the ICAI came back and said you should not tender if should not respond to any tender if it is not exclusive for chartered accountant. I think this is a very important aspect, because many of these the state governments or the local authorities goes for tendering, and where they call for chartered accountants, non-chartered accountants, and ask them to quote. I think it's a very clear direction from the institute that please do not quote for anything where it's not exclusive for chartered accountants. And what is important is that only when a minimum fees is prescribed, and if it is a minimum fees, and I think if it is commensurate to this nature and size, only you can rescind. Otherwise, it should not be. But the fees is very, very important, but again, I would believe that if you're going to compete with a non-chartered accountant, definitely you as a professional will not be able to do justice for what are the fees that are quoted. Again, publication classified advertisement is permitted in the ICAI. Applications for empanelment allotment, it is all nothing which is different. It's been there. Publication of books and articles, only the name of CA should be there, or the firm that which is there can be there. Other than that, you should not be providing any information. Greeting cards, again, I'm not getting into it. Chartered accountants and should not be there. All of this. Sponsoring activities, permitted to sponsor only the of ICAI. Other sponsorships here, only the CA prefix is permitted. Firm name and logo is not permitted. Again, if you're in teaching, if it exceeds 25 hours in a week, you have to get the clearance from the institute. You cannot be spending more than 25 hours. I'm not sure what happens to the coaching institutes which does that, but they also do practice. Members cannot advertise teaching and coaching activities. Again, if you see Facebooks, I mean, I don't know how relevant is this. You see many of the chartered accountants, when they send you friends request, the whole of the friend request has got only teaching or the coaching activities. And I'm not sure how this will be not be considered as an advertisement. I think time is evolved. I think we may have to be, we need to deal this away from, done away with this type of advertisement. Has to be more, should be allowed to be, because when you're talking in a competitive world, when we're saying that we have got all knowledge, we've got all the expertise, I think I'm for the advertisement, because advertisement will help the many of the professionals who do not have that reach. I think it will help up see, the objective should not be that it only helps the larger firms. No, larger firms anyway will find a way out to go for advertisement. We should start looking at the smaller, medium and enterprises which can benefit through this advertisement. And especially, again, advertisement is only which demonstrate that capability and all of that. And again, it goes by the principle of that evaluation, or any client will give you only based upon your competence, not based on advertisement. Again, sharing of firm profile with prospective can be only from a response. This is, again, I'm not sure to what extent, with so much of activities which happen. In fact, I don't want to bring that out, but if you see many of the people host parties, they call their clients, many of them get into it. While you might say it's a personal this thing for running any of these events, but you might still, it will still form part of building up a relationship. So maybe probably you don't, maybe physically you may not share the profile, but you put out a slide, you put out saying that, welcome to all the guests, it's a great event. We are celebrating the 25 years of the celebrations, and this is the achievement, these are the clients, this is what it is, and tell all of them. But the point is, where do you draw this line? I think somewhere we need to start looking at it more. I think this is advertisement part of it, which this is my personal view, not necessary of anyone would agree to it, because they might believe that what I'm saying may be wrong. But I think we have this is overlooked. I think we should start looking at differently. Television movie credits, again, as they talk about CAs, giving public interviews, again, it only talks about, you don't talk about a professional attainments, but just imagine, let me give you an introduction here itself. If Naresh has come back and said, Ganesh, you have done this, it's no shorter than an advertisement when you're coming into public domain when I'm doing a presentation, because you're going to read the entire profile. I think somewhere we need to start looking at all of these differently. Representation, wording of representation is important. Acceptance of original introduced by another CA. Please, this is again one request to all the professionals. Please never ever, if suppose some of your good friends or chartered accountants sought and help, and you introduce to the client, please don't take away the work of that particular person. I think this is a very important aspect. Publishing of address and box numbers prohibited. Education may be uploaded on the internet by members, but there should not be a reference to the CA firm in which is associated. No contact details can be given. I can give you n number of such things which are there floating in this one. But the fact is, suppose if I say I'm practicing as a proprietor firm, and then I say I'm CA this one and my phone number is there, because I've not given any contact details. But I've given contact details when I'm publishing my educational videos. I think these are some things which we need to start looking at it. Advertisements, these are again repeated, which I'm not going through it. Signs of boards, it says it should be appropriate, visible and illuminated, can have a plate with resident with CA, but not with the name of the firm. But what happens if a chartered accountant starts his proprietorship from his residence itself? He has to publish it as this thing. I think this is somewhere we need to bring it where the office and are the same. I think we may need to look at it. Network firms and networking guidelines. Again, this is something which has been come up. The institute might publish this because they're working, there is the white paper which has come through, the concept paper has come through, there are a lot of deliberation, there are a lot of feedbacks from the stakeholders, what can be done, what cannot be done, when do you, I think networks are here to stay. When we talk about global village, networks will be here to stay and we should start looking at it. Use of logo, not permitted, CF logo is permitted. Guidelines for elected members, again, same thing. Accepting a position as or previously held by a chartered accountant who was issued certificate without first communicating. These are no. Please, whether it's a tax audit or a statutory audit, please send out, it's your professional responsibility to send out a communication to the outgoing or predecessor auditor to say that, listen, we have been appointed, are there any issues? And please don't use words saying that, due to preoccupation, therefore I'm not able to carry out. The answer is no preoccupation. If suppose somebody is taking up your business, it is not because of preoccupation, because the other guys, you disagreed with them and therefore they've given. Please provide all the disagreement in it. Nobody can stop you from not paying this, or if you have a hope that the guy will come back, the hope I can give you it in writing. Once you marry him, once you divorce a client, the client, there's no likelihood the client might come back to you unless you have gone to such a level where the client believes that you should be there with that person. So under those circumstances, it's better to be fair to your own self than fair to anybody else. Don't ever think that client is going to come and help you in the event of any challenges. I think it is we have to protect ourselves. Communication required for all types of audits. Grounds for non-acceptance to be stated very, very clearly. Non-payment of undisputed audit fee is a no-no. Fees pending due to non-availability of previous auditor. Course of action, change of auditor. Duty of retiring auditor, incoming auditor. See, some of them have already been captured as part of the what you call the CARO requirements. Also, there is a guidance that has been brought in where another important point is whenever you are not, when you accept a client, you have to send a no objection. The no objection should be registered post-acknowledged due. You can send it through an email. You can follow it up once, twice. If it's still not, it is considered to be as an acceptance. Especially when premises found locked, you can always get back that basis and saying this is what it is. Firm not found a new address, special audit under healthy practice to communicate to statutory auditor. Communication in case of assignment, other professional healthy practice. Lack of time in accepting government audits to make it clear and acceptance. This especially whenever you're accepting bank audits, they say they'll give you appointment today on March 31st and say, I want this to be signed on 2nd of. And you are not even Superman, super power, super thing. How are you going to complete this within the 2 days? I think you need to put your foot. You should put your firm footing saying that you will not be able to carry out any of this work. If you don't hold on to what it is, I think that is where we need to be. It's not about saying that 2 days will be complete or not. The point is whether you will have, if your scope is such that it requires more than 2 days or more than 5 days, more than 1 week, please communicate before you accept it. Put it as a subjective, saying that to that part. The other aspect of this, again, an old act. The old act is not applicable. Procedures diligently to be adhered to, especially in respect of all of the outgoing auditors, registered post acknowledgement due. The RAPAD is that. Unjustified removal of auditors. I think this is a very important aspect of it, where wherever an auditor has been removed, resigns, does not offer, has to send a communication to the board giving reasons why it's not done, and therefore before accepting should get a representation relating to that. All of these as a part of the communications. The ethical standard boards will look at it if there are any matters which is in relation to that. But an auditor cannot say that I'm resigning because I'm preoccupied or created a casual vacancy. I think it's a responsibility of the outgoing auditor to give and help the incoming auditor as to why they believe that these people have not come, they have completed the 5 years or completed 10 years or left it in between, and why they have left. I think this is a very important aspect of it. Exceptions for percentage of profit is again listed down. Liquidator or cooperative society valuers, we have talked about it, everybody knows about it. Again, you can be a promote director in some of the company, but if you're in practice, make sure that it is your only a director, but you don't really work there or are a full-time employee there. You don't work as a full-time. Employment at a CN practice, private tutorship and all of this, but if you're running an academy and also be doing a practice, that's a no-no. Probably you may need to draw that line between what it is. If you've got interest in business, is permitted, generally permitted. See, if there are anything which are, see, let's say you can also be an IBBI professional, you can be a liquidator, you can be an executor, an administrator, and all of that, that is permitted. In terms of members in practice in HU of doing business, you should not be actively involved. Again, these are all no, because it should not contradict between a full-time practice versus being there as this. Audit questionnaire, make sure that you forward your draft observations, acknowledgements, and all of this. And this is a very important. The communication with the clients are very, very critical. Whether it is an audit report, you should share. Whether if it is an engagement letter, you should share and get it signed. Whether it is your management representation letter, you should share it and sign. Whether it is an audit presentation, you should share and present it and you should get it signed. Every financial statement that is signed should be signed by the partner. All of these is a part of the responsibility. This is the professional members in the institute. Again, it's similar to what you have. There's nothing which is a big change. Again, if you're guilty of any civil code, this is you cannot practice as a firm, and this is where it for disrepute. Let me get back. Disrepute. I'm so sorry about that. Not provided. So the question is, can you share any information to any other person other than your client? You should seek the information from the client. You cannot directly publish any information outside of without getting a permission from the client. So this is a very, very client confidentiality rules that has to be very, very important. Working papers are the papers of the auditor. Shall not share, shall not discuss with any of the persons in other than between the engagement team. Only those people are supposed to have this. Make sure that when you've got access to the work papers, whilst under the SS 260, SS 600, you don't have an authority, but under the Companies Act, the rules, the statutory auditor, the holding company auditor has a right to review the work papers. They can go and seek a clarification relating to it. So you can visit the branch and seek clarification relating to it, while they may not share the work papers. But under the Companies Act, the right to get the records and to review the records is of the statutory auditor. Sharing of information I talked about, not possible to set out circumstances which information will be required. All of this certifies name. Position in the case of joint auditor. This is again a very important aspect. If you are a joint auditor, make sure that under SA 299, the responsibility and the work that is performed by joint auditor, get this joint audit, whatever the work shared among the joint auditor, signed by all the joint auditors and given to the board of directors, and its work is divided. Where the work is not divided, it's the responsibility of the joint auditors, jointly and severally responsible. Wherever the issues are being raised by one of the joint auditors, such issues should also be responsible of the other joint auditor to evaluate whether it has an impact on the opinion on the financial statement. Where there is a disagreement with the auditor, the joint auditor can issue a report which will state the disagreement relating to it. So these are some of the things which should be looked at in respect of joint auditor. Report on profit and forecasts. Please comply with the guidance issued under the Companies Act and under this guidance on notes on reports. In terms of substantial interest, we talk about 20%, which is similar to what you have in the Companies Act, or the definition of significant influence. Financial statements, again, it is all which both includes reports, certificates, examination, and all of that includes in all of that. So you might give a corporate governance certificate, you might give an end-use certificate, you might give a ship bonus certificate, you end-use certificate. All of this will form part of your financial statements. So council did not permit a CA employee to certify if he's working in the same company, if the same college, is the same trustee, it's not allowed. So therefore it becomes a conflict of interest. It's not allowed to do it. Again, you should not supposed to write books. You're not, statutory cannot be internal auditors as well as the tax auditor. 2 years of cooling period is required. Members to satisfy where appointment is statute, all of this. Materiality, again, this is again a big debate that is happening in NEFRA on materiality. Materiality again, what is the impact? Now, materiality is again, how do you evaluate a misstatement, right? Because if there are any material misstatement, risk on account of material misstatement in financial statements called the ROM, or risk arising out of material misstatement, compare that material misstatement or unrecorded amounts with the materiality. I think that is where we need to start looking at. It is materiality's misstatement is not only of the current year, but of the previous year, which you need to carry forward and compare with materiality. And if it is yes, does this result into a deficiency? If it results into a deficiency, how have you dealt with in internal control of financial reporting? How have you dealt with in terms of your report on financial statements? Does it result into deficiency, significant deficiency, or material weakness? This issue is getting closer and closer interaction with the NEFRA, and NEFRA is now challenging many of the firms on materiality. Failure to report a material misstatement again becomes non-compliance, negligent in duties. Again, this is a judgment as to what can be known, what can't be known. Can't use an hindsight and say how you could have known using your judgment. So this is very, very important. Your documentation speaks for everything, and that's what matters most. Gross negligence, again, this is a very important aspect that's been brought in. If you've got securities, you can't say investments are there in the shares. You have to verify securities, reconcile bank balances, check bank balances, verify issue certificate based upon what is available in records. Not only this, if any of the client walks into you and says, I want you to issue a certificate yesterday, please don't issue any certificate. As much as you do an audit, you need to do the same procedures for carrying out, whether getting an engagement letter, sending out confirmations, getting the bank statements, verifying the bank statements, checking all the credits and debits, verifying with the supporting records. Only then you can issue a certificate. If you're not doing any of this, you cannot be doing any certificate. It's a very, very important aspect. Generally accepted accounting principles, procedures is very important, whether you're complied with accounting standards, generally accepted accounting standards, generally accepted accounting principles, auditing standards, guidance notes, EQCs, technical guides, practice manuals, all of this is required as part of this. UDIN number has to be quoted. And again, this is something which is very, very critical. This is also something which has been issued by the institute, which governs this while there has been significant extensions, but nevertheless, these are very, very important. That is to be known. Never keep client monies with you. Never keep anything. If you're an auditor, keep it separate. Other than that, again, if there is any misconduct which is in relation to the members of the institute, then they're governed by the guidance or guidelines of the council, applicable to everybody. Again, these are all something which are routine, which I'm not looking at it. Again, if you look at it, there is this institute as notified, but now with the advent of the new disciplinary matters, which is with all of the 3 institutes were headed by the government with the representative from the institute, this is something which will no longer be valid. But whatever is right now in existence will continue to be there and then gets closed as per the norms, whichever the disciplinary committee. That's all I had on the presentations. I'm dot on for questions and answers. Over to you, Mr. Naresh, and all the participants. I know I've been talking for about 2.5 hours.
So members, do you have any points or queries for discussion? You can have these queries discussed and your doubts can be clarified. Anything on NOCLAR or the Code of Ethics?
Yeah, you can unmute everybody actually.
Yeah. So they're all, they can ask questions directly. No issues.
Yes, sir. We're giving them the.
Either it is too much to observe or there's no. too scared to observe. Any questions anyone has on the understanding of section 260, 360, Code of Ethics, iceberg codes? Is doable, not doable? Yes, Mr. Ganesh.
Certain clauses are deferred, no?
So those clauses which are deferred is now what will be applicable. It is deferred up to 30th of September, but now will be applicable from 1st of October.
Sorry, Manna. Oh, where did he get? Perfect mark. Oh, I'm the
So does the Code of Ethics stipulate the number of years for a partner to audit private company? There's nothing which stipulates the number of years. Anybody, you get a certificate, you can be an auditor of that company. There's nothing which is prohibited.
One question answer panel you can see.
Yeah, I'm seeing that. Okay, other than even Code of Ethics, you can ask me on Schedule 3, you can ask me on Caro, you can ask me anything that you're about. Oh, there's one more.
Tax audit.
Tax audit, he asked me a question. If I have the answer, I'll tell you.
Clause 44.
That's a debatable question.
No one is ready with the data.
Exactly. It's very difficult. That's why I said it's a debatable one. Because I think it's ridiculous to have something like that. I mean, that's my personal view, but unfortunately, no one is coming to help on that.
And any program on audit trial, at least from 22-23, it is applicable and none of the clients are geared up for it.
Yeah, you're
at
right.
Small clients.
You're absolutely right. I think this is exactly what it is. You're already in the second quarter of the year, and then the audit trail, there's no audit trail. There is only audit trail. There's no audit trail.
The institutes should start teaching the auditors how to track the audit trail.
No, it is not the auditors. Again, this is where we have been putting our head into all of this. Because why should we do? It is a CII should do it. ASSOCHAM should do it. It is the members in the industry should do it. They should drive it. How can we now? You just imagine. See, this is where we have overplayed our role. See, when you take the section 44, the clause of the 44 clause of the tax audit, same thing. Everywhere we said we are the GST, we are the partner in nation building. Because of us, GST came into picture. Today, the same tax audit report has been there. Not now. Every time it's getting different. So even this one audit trail, where are the softwares? See, the whole objective is there should be a trail, and that trail should be captured every day. Who is going to certify? Because the whole objective, see, that means what they're saying is some people are on Tally. Some, in fact, I saw in some of the conferences where they came up with Tally and saying that Tally now will have audit trail. Tally is the most, you know what?
Agreed. Censored.
But I'm just telling you, because they cannot be audit trail in a Tally environment. See, trail is, you cannot, that means every day, whatever I enter, it should get closed. That means it's like you can't change any entry on that day. Next, it can happen only in an environment which prohibits from recording an entry of that day. So that means in a SAP environment I can create, but I can do a backend change and can change the number. That is also possible in SAP. But audit trail is where if you're going to enter into a transaction, let's say in Tally today I've entered in transaction. I do batch processing. I don't do real-time processing. When I do batch processing, what I do, I take all 30 days and I put it there in one day. So audit trail will not come there. So in audit trail is something which Now, the industry has to do it. Why should an auditor go and tell boss, this is audit trail I have because it's there in auditor report? It is defined under Companies Act. And who is raising this with the industry, the Ministry of Industry and Commerce and Industry? Ministry of Commerce, sorry, not the Finance. Who is raising this issue? I think institute should raise this issue. Or we should qualify saying that we don't have audit. The moment we say we don't have audit trail, it means that internal control fails. That's another issue. The whole objective of bringing this issue is to identify if there are any fraudulent transactions. It's also to bring the issue of maker checker. That means whatever you have entered transactions, which should not be reversed, and therefore you will have the trail to, even at the end of the audit or end of the period, even the company, somebody comes and sees, they will be able to extract that information that is relevant. Today, audit trail, again, I'm giving it to you. If the way it is going through, chartered accounts can't certify that account. Unless ICAI comes up with a guidance and saying that what do we write there?
There's one question raised by CA Dhananjay. He says, CA can have COP, can work in the organization.
No, you cannot work in an organization if you have a COP. Unless you see, the whole objective is a COP only in a practice, it is chartered accountant is allowed. Because you're holding a certificate of practice in a chartered account which is in practice, not in a company. That is not allowed. You're a professional accountant in service, not a professional accountant in practice.
Another member, CA Vinod, he raised a question for applicability of CARO. If share capital plus reserves is negative, but the share capital of such is more than that of than the limit, whether CARO applicability in that case?
And if the CARO has been applied in the earlier period, the answer is yes. And if it is total net worth is this thing, then you will go based on total net worth.
So any more queries, members?
Hi, this is Chaitanya. Am I audible?
Yeah.
Question was, one of my friends in employment for about 25 plus years has taken a COP some 4 months back. Now, he's got an assignment from his ex-employer in Bangladesh. It could be basically as a consultant because the company had acquired some business in Bangladesh. So they wanted him to sort of handhold before the new CFO and all come in. It's actually a consulting sort of role. Could be stretching between 3 months to 6 months. Now, having taken a COP, is it required that he actually sort of surrenders the COP for this assignment?
No, so has he been, so the question of when you've taken a COP, the question is that he has established a practice and what is a contract between him and the company? Is a contract between him and the company that you also render professional accountant service, that means CFO services, then it is fine. But if he is an employment, gets PF deducted, ESI deducted, this there, he has to comply with the, then it becomes an issue. So
there is no trail of any employment. As you said, probably the retirals of PF, nothing is adjudged. Then it's a pure contract.
Then it's fine. As a CA in practice, you can be a professional, you can render a CFO service also. Nothing stops you.
Okay.
So one question came up, 15% fees limit provision. So what it says is, suppose if you've got a fees of 10 lakhs, and if you from one of the clients who is giving you more, let's say in the example that I gave was 2 lakhs. Consequently, for 2 years, you've got 2 lakhs. That means he almost gets 15, out of the total 10 lakh fees, 2 lakhs comes from this. That is where the institute is coming back and says, you have to mitigate that risk. How do you do it? What are the safeguards that you have to take? And how you should start distributing it. So therefore, you don't have any client which gives you more than 15%. So this is all comes under the intimidation threat advocacy threat and all.
One more question is, can non-registration of company for professional tax purpose constitute material non-compliance of law?
So,
Non-registration of company.
so okay. Now this is a very important point. Now the question is materiality is in terms of you have to evaluate from an amount perspective also. Suppose if the professional tax is, let's say I've started the company and the amount is, let's say 2,500, 5,000 or 10,000 maximum overall. It doesn't really matter when it comes to overall. So you look at the materiality perspective also when you're determining this one. By not registering professional tax, what is the implication that it has on the company, on the operation and on the financial statement? That's what you need to look at. Any other questions?
In fact, if any member wants to ask a question, they can
Unmute
unmute
and
and ask the question straight away. No need of even typing. Mr. Ramnamurthy says, if the company receives a notice from customs in July 22 for import duty short levied for the financial year 21-22, is it a subsequent event?
So okay. So the question then comes up is, they have levied a penalty and this penalty is disputed. If the penalty is disputed, then it is a subsequent event, it does not have an impact. But on the assessment when the company had, that means all the cases, everything was decided. It is only the judgment which was there, which took about 3 or 4 months. Then the event occurred on the reporting date itself, not after the reporting. So you have to evaluate on that basis.
CA Panchajanyam says, can a member having COP act as consultant to a CA firm and have designation of director in the audit firm?
Is that a question which has come here?
Yeah, it's there.
1 minute. Let me just- Can a member having COP act as a consultant to a CA firm and have the designation of a director of an audit firm? Now the question is, okay, now this is where you need to be very careful. So in your membership information that you provide to the institute, did you provide to the institute that you have your own practice as well as you are a consultant? That means having a director definitely is not allowed. I mean, that designation is something which is not there. You're only a consultant. If you're a director, what is the terms of the director? If you're in service, that is where you need to bring it out in the institute. If the institute, if you have any doubts relating to that, you should check with the institute. But my guess is if you're in service, holding a COP in that is allowed, but you cannot be signing off any documents outside. Because in the information that will be provided by the company to, by the firm to the institute on the form 18, it says you are an employee under that as assistant. So you have to be careful on respect of, if you're an assistant, an employee, holding a COP for that is fine, but you can't practice and issue any certificates.
So just now, CA Ramnamurthy also mentioned about this import duty short levy. So he says it's not penalty, it's short levy of duty. And basically it's a wrong tariff which was applied.
If it is an error, that's the whole objective is error existed on that day. If it is an error, you can account for it. If it is a judgment, which section to be applied and which rules to be applied, then it is not.
Ramanamurthy, you can unmute and you can talk also. You are not able to hear, sir.
So that Caro applicability is not on net worth, the Caro applicability is on paid up capital. I just want to correct it. The only where the private companies are all exempted, and that is where you need to say whose paid up capital is less than or equal to 1 crore as on the date. So there are certain specific exemption for private companies. So one other question which is there, which has come to me about regarding 44 of 3C, we should give our limitation. I agree with you. Muralidhar actually had sent out a message. If there are any, if clause 44 especially, and this is a dilemma which everybody, and please don't neck yourself out and say this is true and fair. Put as much as qualifications in the main audit report of from 3CA or 3CB, whichever you're using, in respect of clause 44, stating that this is what as per this thing, and you're subject to this. You qualify that and then give the clause. Put all your limitations. Whatever information that is available, that is what it is. Never neck yourself out and say it is in agreement with the books and records. That is something which is very, very clear on the GST versus this.
I think Mr. C.A. Ramanamurthy is trying to talk, but we're not able to hear him.
Yeah, hear him. So he can type if you've got in here. Is there, in my case, applied wrong tariff? So if it is an applied wrong tariff, and then you should account it as of 31st. So the error, it is actually an error. Then error has to be accounted as of the reporting date, which is 31st March, whichever period is 22. If you have not signed, that has to be done. So it is an error, not judgment, because anything that is where there should have been done. So even in the past, they would have done and they would have paid at a higher amount. Then it is actually an error which you should be corrected.
But he says it's done by department, not by client.
If it is done by department, that is what I'm saying. If it is a department and it is, if it is disputed, then it, see, if it is not by the not by the client, and the department is levied it, what will happen? As a client accepted it, if the client has accepted it, that means you are agreeing to, the client is agreeing to that position. If the client is disputing, saying that, listen, I don't agree to your tariff, you can apply it and they show it as a penalty, I will dispute it in the forum.
It says client accepted.
And then the question is, if the client is accepted, record it, simple. Then they have to accept auditors also. There's no two doubts on that.
So I think one more question which have come just now.
No, that's only thank you. Acha, in income tax returns, IP address captured, then who is filed by it, whether it's by client or CA. Income IP rate is captured, then who is filed by it? who is filed IT return, whether by client or same. Again, let me be very careful. Be careful on this part of it. All IP addresses are captured. You can use the services of a professional accountant or a chartered accountant, or a client themselves can file it. It is all depends upon what is your contractual arrangement with that client. Have you got an engagement that you've been engaged to file or retained by the client to file the return of income? Filing from any of this, it doesn't matter, because of the technology challenges that you have tried from your CS office, you've tried even from your client's office, whichever is applicable, we have been able to file it. So that should not be an issue for it. But definitely what is important is make sure that your contractual arrangement with the client is on record.
One anonymous messages: are CAs in practice allowed to register in portals like Upwork, Freelancer, and service providers?
Let me be very honest with you. This is something which is, if you're lucky, you're fine. If you're not lucky, somebody puts a question, then it becomes a problem for you. My suggestion is please don't do it, because this is where, this is where you need to start whenever the central council members, anybody comes from the board, please put this, please make a representation. I think we have to start outliving, as I said, this is outlived. I'm just saying, somebody, I don't put my name, somebody, my friend says, tags me saying that, giving it tuition classes. That's it. Tagging is, anybody can tag. But is it an advertisement? Somebody might say, sir, it's not an advertisement, but I will say, boss, your name is there, your classes are there, everything is there. So I think what is important for all of us to remember is that the best way to deal with it, write to the institute saying that this is what it is, please help us, because somewhere we need to bridge that. In fact, I was speaking with the past presidents also the same thing. When everybody comes from the elected members, comes to the newspapers regularly, is that an advertisement or not? When they come on screen, when they come on everything, it's an advertisement. So why prevent the professionals in practice?
I think
we are up on time. Yep.
We're almost reaching our time. So I'd like to thank CA Ganesh Balakrishnan for sparing his time and addressing members on Code of Ethics Revised and also on NOCLAR, and explaining in detail about various facets of Code of Ethics with a lot of examples. Code of Ethics from 2009 to 2019 and various facets of Code of Ethics in reference to KMP, advertisements, and various aspects of it. So thank you, Ganesh, for your time, and despite our reschedulements a couple of times, you still pulled off. Also, thanks to all the members who have been keen on listening to him and participated in today's session. Thanks a lot for each of you. Members, for you in particular, for all the participants, since the Institute has now started off with the DLH series, you get your CPE only by answering questions in your learning portal. So please log into your learning portal and answer to the questions in next 3 days time. So then only you get your CP hours. So I'm sure each of you, having heard Ganesh so clearly and patiently, I think you have all the answers for the questions which the DLH would be posting in the learning portal. So I'm sure each of you will get it. Thank you, Ganesh, and thank you all the participants for being here this evening and interacting in detail on this topic. Thank you very much.
Thank you very much, and thank you so much for your time. Thank you.